Welcome to the deep dive. Today we're jumping right into the crypto market and kicking off with a pretty stark number, actually. Over half, 52% to be precise, of all crypto tokens that launched since 2021. They're now basically dead. So if you're trying to get your head around this really high stakes world, especially thinking about 2025, this deep dive is definitely for you. We're going to unpack why so many fail, how the market's changing, like fundamentally changing, and what serious investors are really looking at now. And just so you know, this is all coming straight from a new Awan Finance report. It was just published today, July 9th, 2025, in the Economic Times.
It is an alarming statistic, isn't it? And, what really jumps out is that almost half of those failures happened just this year, in 2025. It just hammers home the risk that's still very much present in digital assets. It kind of sets the stage perfectly for talking about how much this market has, well, grown up from those early kind of wild retail speculation days.
Okay, let's dig into that failure rate a bit more. We're talking, over 3.6 million tokens, basically defunct since 2021. That's huge. And the report says over 5,300 new tokens launch every single day. It feels overwhelming.
It really does.
But the core issue seems to be, like you said, many just don't have real utility, right? They're not built to last. And I mean, when you hear that meme coins and outright scams cost investors over $500 million in 2024, wow, that's serious money lost. So what's driving this incredibly high failure rate?
Yeah, that's really the million-dollar question, or maybe the $500 million question here. The report points pretty directly at that initial hype cycle. You remember, right? The big bull runs in 2016-17, and then again 2020-22. It was heavily driven by retail investors, folks chasing, those quick, sometimes massive gains.
Right, the FOMO was intense.
Exactly. And a lot of these tokens, honestly, they just rode that wave. They didn't offer much real value underneath the excitement. Yep. But looking back, that whole phase, it really highlights the bigger story now. The market moving away from pure speculation. It's demanding, substance.
Okay, so if that earlier period was all about retail hype and these rapid failures, the report then paints a picture of a pretty major shift happening now, especially since 2024.
Oh, absolutely. It's a fundamental shift. The scale of institutional adoption, even governments getting involved, it's really something.
Like actual governments.
Yeah, think about it. The report mentions the U.S., China, even Bhutan, holding Bitcoin in their sovereign reserves. That's significant.
Wow.
And then you've got the big financial players, BlackRock, for instance, deploying, $80 billion through Bitcoin and Ethereum ETFs.
80 billion. Okay, that's not small change.
Not at all. And these ETFs, the exchange-traded funds, they make it much easier for traditional investors to get involved without actually holding the crypto themselves. So this kind of institutional buy-in, it completely changes the perception, doesn't it?
It has to.
The Awan Finance report basically frames this as the crypto ecosystem finally starting to look like a more mature financial market.
That feels like a world away from the Wild West image crypto had for so long. But, the question for a lot of people listening might be, is this real maturity or just a different kind of hype? And it's also really interesting. The report notes India ranked #1 in global crypto adoption twice recently, even with tough taxes for retail folks. That's resilience.
It's a fair question about hype versus maturity, but I think this time is different. Because with these big institutions involved, there's a much stronger demand for credibility, accountability, and decisions based on actual research, not just tweets.
Right, due diligence.
Exactly. Purvang Mashru, he's a senior quantitative research analyst at Awan Finance who's quoted in the report. He says, look, crypto markets might seem overwhelming, but they're gradually maturing. And he points to things like the total market cap crossing $3 trillion. And Bitcoin itself being valued more than giants like Google and Meta.
More than Google and Meta. That's quite a statement.
It is. But he also adds a crucial warning, of course. Volatility is still a major risk factor. You can't ignore that.
Okay, so we've got this huge shift. Fewer meme coins, maybe, and more massive institutional players, governments even. So what does this all mean for you, the listener? If you're looking at crypto in 2025, how do you even begin to sort through those thousands of new tokens?
That's the key challenge, isn't it? And the report is pretty clear on where serious investors are focusing now. It's shifting toward on-chain metrics.
On-chain metrics. Okay, what does that actually mean?
So these are basically data points you can pull directly from the blockchain itself. It's transparent data. We're talking things like how many active wallets are interacting with the project? Is the protocol actually generating revenue? How much work are developers contributing? How transparent is the project's governance? How are decisions made? It's really about looking under the hood at the fundamental strength, not just getting swayed by price action or hype.
Ah, okay. So it's less about the promises and more about the proof that's actually visible on the blockchain itself. It sounds kind of like, traditional stock investing. Don't just buy a stock because it's trending. Look at the company's actual performance, its financials.
Precisely. That's a great analogy. Just like stock investors look at cash flows, profitability, crypto investors need to dig in and understand what they're investing in and why it actually holds value. The report kind of concludes that, yeah, hype-driven tokens will still grab headlines. That's probably not going away entirely.
Yeah.
But the projects likely to win in the long run, they'll be the ones with strong fundamentals, real use cases, and crucially, that institutional validation we've been talking about.
Yeah, it really brings home that advice from Purvang Masher again. Apply the same seriousness, the same analytical rigor to crypto as you would to stocks or bonds. Evaluate the value, the utility, how it fits your overall strategy. It really comes down to doing your homework, doesn't it? Fundamental analysis and education.
Absolutely. So if we zoom out for a second, the big picture message from this report is pretty consistent. Crypto is becoming more mainstream. You see it with governments, with institutions increasing their exposure. It seems, well, almost inevitable now. And that just underscores why it's so critical now to look past the short-term noise, the daily ups and downs, and really focus on credible projects backed by solid research, being thorough, being informed. That's going to be the key, I think, to finding real opportunities in this space as it keeps evolving.
I agree. So, for you listening, what this deep dive really shows is that, yes, the crypto market is still incredibly volatile, failures are common, but at the same time, it's going through this profound change. It's maturing, it's gaining institutional acceptance. And finding those meaningful opportunities isn't about luck or chasing the next hot meme coin anymore. It's about understanding the deep fundamentals, the real value propositions. It's a different ballgame. So here's something to think about as we wrap up. If Bitcoin is now valued higher than giants like Google and Meta, yet more than half of all the new tokens launched since 2021 have already failed, what does that contrast tell you about the future shape of digital assets within the bigger global economy? What does value really mean in this space, beyond just individual coins?